Hello everyone and welcome to the YouTube channel of BeingACCA. This is Tushita Gupta, ACCA affiliate, and in this video we are going to be solving Section A questions from target costing. So let's get started. In target costing, which of the following would be an appropriate strategy to reduce a cost gap for a product that existed in a competitive industry with demanding shareholders? So increasing the selling price is definitely not an option when we are in a competitive industry. Reduce the expectation gap by reducing the selling price. Again, we cannot reduce the selling price because this will not be coming under target costing. Then reducing the desired margin on the product. Now this is also something that we cannot do because we have demanding shareholders. Then mechanizing production in order to reduce average production cost. Yes, this will be the most appropriate way to reduce cost gap in a scenario where we are in a competitive industry with demanding shareholders. Moving on, which of the following strategies would be an immediately acceptable method to reduce an identified cost gap? So first of all, we have reduce the desired margin without discussion with the business owners. We cannot do that. Reduce the predicted selling price. Again, selling price reduction will not have help with the target costing. Source similar quality materials from another supplier at a reduced cost. Perfectly, this is something can be done. This will be a good way to reduce your cost gap. Then increase the selling price. Again, maybe in a competitive market, increasing the selling price may not be immediately acceptable to us. All right. 43. The predicted selling price for a product has been set at $56 per unit. The desired markup on cost is 25%. Material cost is $16 before allowing for additional materials to allow for shrinkage of 20%. For every 10 kg of material that goes into production, only 8 kg comes out. So if the labor is the only other cost and 2 hours are needed, what is the most the business can pay per hour if a cost gap is to be avoided? So first of all, we have our selling price with us. The selling price that is given to us is $56, right? So $56 is our selling price. Now we want a profit of 25% on our cost. So that means I do have my cost, I do have my profit which I want at 25% of cost. So when we talk about the equation of cost and selling price, so cost plus profit gives you your selling price, right? So with this equation, I can find out how much my cost will be, how much my cost should be if I want to have a profit of 25% on cost. So cost is something that we have to find out. Then profit we know is 25% of our cost. So 25% cost gives you your SP of 56. So that means 125% cost equals to 56. So cost comes out to be 56 into 100 divided by 125, and this will give you your cost as 56 multiplied by 100 divided by 125 gives you 44.8, and this is your target cost. So if we want to achieve a profit of desired markup of 25% on our cost, $44.8 is something that is the maximum that we can target our cost to be at. Now for material, we are spending $16, and this is before allowing for shrinkage. So this means that whenever we are putting in 10 kg, only 8 kg is coming out. So that means 16 is before that wastage. So 16 multiplied by 10 divided by 8, because I'm actually putting in more material. I am putting in 10 and I am getting 8. So I want to find out the cost of my 10, because I have to allow for my shrinkage also, because that is something the cost is already being incurred. So 16 into 10 divided by 8 gives me 20. That means my material cost is $20. For labor, I need 2 hours, right? It is mentioned that labor requires 2 hours. So what is the maximum rate that we can offer to the labor? How will we find that out? So I will simply find out the difference between this cost, that is my target cost, and subtract my material from this. So if I subtract 44.8 minus 20, I get 24.8. So this is the something that is maximum I can pay to my labor for 2 hours. Now I want to find it for per hour, so I will divide 24.8 by 2. So 24.8 divided by 2 gives me 12.4, and they want it for 2 decimal places. So when I write my final answer over here, I will say that my final answer is 12.40. So 12.40. Now moving on to my question number 44. Question 44 says, which of the following techniques is not relevant to target costing? So when we are doing target costing, we do a value analysis, definitely yes. We find out where small cost reductions can be applied to close the cost gaps. That is definitely done. Variance analysis is something that we do not do in our target costing. So that is something that will be our answer. Value analysis we do. Functional analysis also we do. We do this at the design stage. Now, what do we do this for? This ensures that a cost gap is reached, or to ensure that the product design is one which includes only those features which the users of or the customers actually want. We are not doing any unnecessarily features which are costing us money, and the customers don't want that also. Last is activity analysis. We do activity analysis also. This identifies and describes activities in an organization and evaluates their impact on operations to assess where improvements can be made. So variance analysis is something which we do not do in the target costing. It is something that is done in the product lifecycle costing. Then let's have a look at 45. The selling price of a product Sigma is said to be $250 for each unit, and sales are expected to be 500 units. Return is 15% on its investment of 250,000. What is the target cost? Now we have to find out the target cost. First of all, we can say over here that our revenue, so my revenue is going to be 500 units multiplied by selling price of 250, which gives me 125,000. So this is the total revenue that I'm going to be earning. Now, how much profit do I want to make? I want to make a 15% return on my $250,000 investment. So the profit that I want over here is 15% multiplied by 250,000, and that gives me 37,500. So this is the profit that I want. So the difference between two is something that my cost can be maximum, right? So my cost can be 125,000 minus 37,500, and the difference between these two is 87,500. So this is my total cost. Now they have asked me for each unit of Sigma, so I will divide this by the number of units. My number of units, so cost per unit will be 87,500 divided by 500, which is the number of units, so divided by 500, and with this I will have my answer as $175. Last option is the correct one. Now moving on to question number 46, I have, my apologies. Yeah, VC company is a company of opticians. It provides a range of services to the public, such as eye tests and contact lens consultations, and has separate dispensaries selling glasses and contact lenses. Patients book appointments with an optician in advance. The standard appointment is 30 minutes long, during which an optician will assess the patient's specific requirements, provide them with eye care services that they need. After the appointment, patients are offered the chance to buy contact lenses or glasses from the dispensary. Now, which of the following describes a characteristic of the services provided by an optician at VC during a standard appointment? Now, what is something that can be the characteristic? So, services are tangible. No, services are not tangible. In fact, they are intangible. They cannot be seen or touched. They can only, it can be, they cannot be seen or touched, right? So they are not tangible. Then homogeneous, definitely not. Why? Because each of they are, the procedure is that they are providing specific requirements, and then eye care services that they specifically need. So this is not homogeneous also. Now non-perishable, this is also eliminated. Why? Because services cannot be stored, so they are perishable. Then simultaneous, yes, definitely simultaneous, as in the fact that as soon as the the optician is giving the service, at the same time the patient is taking the service, so it is simultaneous. Now moving to the last question that we have under target costing. Match the stages required to the correct step to describe the sequence when operating target costing. So we have to match the steps over here. So we have the stages as cost the product. So cost the product will usually come later. Determine the profit margin. Yes, this will come somewhat earlier. Then set the selling price. This will also be in somewhere in the initial stages. Use functional and value analysis. This will probably be at the end, right? Identify the cost gap and develop the product concept. So whenever you are, setting the price for something, first of all, you have to know what your product is. So the first step will always be to develop the product concept. Now, after you have done the concept, you come at your selling price. You see that how much is the selling price that we can sell in the market and the customers will be willing to buy it. So then we set the selling price. Then the next step is how much profit do I want to achieve. So I will set this as the third step. Now the next thing, now I do have my selling price, I have my profit. Now with this I will have my cost as the next step. So I will cost the product, right? Then I have my selling price, I have my profit margin, I have my cost. Now the next thing that I will see is identify my cost gap. And the last thing that I will do is use functional and value analysis. With this, we have come to an end to this subtopic called target costing. In the next video, we will be solving life cycle costing. Thank you so much for watching. Stay tuned for the next one.